What's going on, everybody? Welcome back to Sora Trading Academy. Let's get right into this. NVIDIA's double top we discussed in last week's video confirmed on Wednesday when it closed below the 118 neckline as we discussed. If you missed that video, I'll drop a link in the description below so you can check it out. Also, if you like to make money while trading stock options, sign up for a free 7-day trial and get our trades in real time. Last week, members booked over 600% in cumulative gains. Again, I'll leave a link to our Patreon where you can get a free trial. We've been short NVIDIA for the most part since testing the 140 level, as we shared with you guys in the last couple NVIDIA videos. Today, price fell sharply at the open, and traders in our group were able to lock gains at $430 per contract from $330 and $360 per contract for a nice win to start the day, with that sharp move lower. Today, price tested the 106.30 level, so price is near the measured move or in the vicinity. And even though I think a retest of the 106 level is highly probable, it's really too oversold at this point to hold puts overnight and just not worth the risk. Remember, NVIDIA has dropped from 140 to 106 in just the last couple weeks or so. I'm expecting price to digest this move for a bit before retesting the 200-day moving average, which I think is a potential target. NVIDIA closed back below the 50-period moving average for the second day in a row on increased volume, but not enough volume to signal a bottom. Price is rising within an ascending channel, and mid-channel support is at the 103.74, with additional support near an open gap at 101.52, with the lower channel support coming in at around 93.36. On the upside, the neckline needs to be reclaimed at the 118 level. Above that, price needs to close back above the now declining 20-period moving average at 124.21 before she can make another run at all-time highs near 140, one step at a time. And I'll continue to drop these videos for you guys at least 3 times a week or more, so be sure to subscribe so you don't miss my next NVIDIA, Tesla, or SPY analysis. The selling has been fairly orderly and on negligible volume. The stock is down 19.5% from the all-time highs. So believe it or not, it's just pennies from being down minus 20% from all-time highs, which, as you know, is official bear market territory. One thing that NVIDIA will struggle with is that nearly 40% of their revenue comes from 4 companies: Amazon, Microsoft, Google, and Meta. So dependence on a small number of large customers means that losing even one of these clients or experiencing a reduction in orders from them could significantly impact NVIDIA's financials. I'd like to share with you what we traded recently. We bought the IWM July 26th 222 calls for $158 per contract. Moments after I clicked the buy button, I sent our alerts to our Discord options trading group and sold them near the last hour for $325 each for a 105% profit. If you would like to get these alerts, after we make a buy or sell, get a 7-day free trial by going to my Patreon. I'll drop a link in the description below for those that like to trade options. While the concentration of revenue does introduce risks, these are somewhat mitigated by the nature of the companies involved and the essential nature of the products NVIDIA supplies. These companies operate cloud services, AI research, and other tech advancements where cutting-edge GPU technology is crucial, suggesting a continued demand for NVIDIA's products. Furthermore, NVIDIA's diversification into different sectors like automotive, professional visualization, and gaming provides additional revenue streams and reduces the overall risk posed by dependence on its top 4 customers. Overall, while there is inherent risk in customer concentration, NVIDIA's position as a leading technology provider in high-growth areas, coupled with its ongoing innovation and expansion into new markets, helps balance these risks. The situation warrants monitoring, but might not necessarily make NVIDIA a risky bet, especially if it continues to manage its customer relationships effectively and diversifies its client base and product offerings. According to recent analyst forecasts, NVIDIA's average price target is around $131.59, with higher estimates going up to $200 and lower ones around $62. The price has fallen below key high-volume profile areas, which often act as support zones. When the price falls below these zones, it can lead to accelerated price movements due to the lack of immediate volume-based support until the next significant node. The next high-volume profile node is around the $94 level. This also coincides with the target measured move from the formation of a double top pattern. The double top is a common bearish reversal pattern, suggesting that if the $94 level is tested, it could confirm the bearish outlook initiated by this pattern. The RS1, Relative Strength Index, is nearing the oversold territory, which might indicate that the stock is becoming oversold. However, in the context of entering a speed zone, this might not immediately result in a rebound until more substantial support levels are reached or other technical or fundamental factors come into play. Drop your thoughts in the comments below, and if you found this analysis helpful, please like this video and subscribe for more updates. Stay tuned, and let's make some money tomorrow.